Tuesday, July 26, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at the Nord Stream 1 news that we've had yesterday, and how, in my opinion, that could be a spark for the coming currency collapse or hyperinflation in Europe. I don't think it's going to be a European only event. It's going to be a world event. The dollar, of course, is the granddaddy of the system. That will hyperinflate as well. And I'm going to reference this book here because there's a lot of similarities with what's going on today to what went on in Germany after World War I or even during World War I. Before I start, though, I like to thank all of you again for the fact that, yes, you appreciate what I have to say. I never thought 6-7 years ago that I'd have so many followers on YouTube. And yes, thank you very much for all your support. And make sure you keep spreading my videos out there, my views to friends, families, and colleagues. Thank you again. Billy is here today, but he's on the floor. He's still not very comfortable on the sofa. He is gonna be groomed today. His mobile groomer is coming this afternoon, so he should feel a bit more comfortable after today. Before we look into Nord Stream and why I think it could be a spark that triggers hyperinflation, and I'm not saying that it causes hyperinflation, but it's a spark. I just want to reference a video I did in April of last year, and it's entitled "All the Ingredients for a Hyperinflation Currency Collapse Are in Place." And I went through the list because, yes, I don't want to make it seem that it's just Nord Stream, the situation, energy situation that's causing this. We have to go back further than just the last 2 years. And that's why I think it's important you listen to that video if you have time. I'm going to put it up in the cards in the description below. The other thing I recommend is if you go into my YouTube channel and you do a search for the word hyperinflation, you're going to find a lot of videos. I've been warning about this for many years. And it's something that is very, how can I say it? It's like we've never experienced it in the West. I mean, where I grew up in Brazil, it happened, and it's so quick that you don't even like have time to protect yourself. And if you're not protected, you could lose everything in terms of monetary savings, and it's a tough period. It's also a period where you don't just need financial protection, but you also need spiritual well-being. You need to be in, how can I say, in peace with yourself, mentally, spiritually. You need to have friends. You need to have a community. And I'm going to put some videos about that up in the cards. Some interviews I did with Star Path Academy, and also someone from Lebanon who has been through hyperinflation the last 3 years in that country. It's more than just about money, but of course having protection outside the system in terms of precious metals will help you, especially in the aftermath of the hyperinflation. So yeah, go through this video, I would say, that I did over a year ago about all the ingredients. And so let's get to the When Money Dies, The Nightmare of the Weimar Hyperinflation by Adam Ferguson. And I want to go to page 10 here. because it talks about the period before the 1920s. So it says here, thus were the government's plans drawn up willfully and simply for financing the war. That's World War I. And that's the German government, of course. Not by taxation, but by borrowing. And with the printing presses as well to supply both the needs of the government and the growing credit demand of private business. Does that sound familiar? I'll come back to that in a minute. Taxation was to play not the smallest part in meeting the cost of war before 1916. The Allied blockade of the Central Powers through Germany, which over half a century had grown to be a foremost trading nation, fully back on her own resources for fighting the most devastating war in history. It was inevitable that those resources would be shot away to nothing. The question was when the bill would be presented and who would pay for it. So for the war and for the government borrowing, for the printing presses, replace that for the great financial crisis and the aftermath of that, and all the borrowing that government had to do, and all the printing press money that has been created by the central banks. That's really the seeds of the current problems we have, not just in Europe, but in the US. And there's no better chart than this one here from YardeniResearch.com. It shows you all the borrowing that we've had since 07, 08. Major central banks, that's their assets on their balance sheet has gone from like 5 trillion in 07 to almost 33 trillion until recently. Yes, they're trying to normalize it, and they will fail, of course. There's no way on God's green earth that they can normalize things without collapsing everything. Even Edward Chancellor, who's a very prolific writer about economics and markets, and I'm going to put a really interesting article he wrote recently about this in the description. He doesn't think it can be done as well. He sees stops and starts in terms of inflation. He sees a bit like in the 70s. Apparently, that's what the research he's done. You get inflations, then, slowdowns and more inflation. And he even mentions hyperinflation. And I'm much more convinced, I think, than him that we could have the hyperinflation. So we have to look at what's happening today in this context. All the events that have happened in the last 2.5 years with COVID, with the Ukraine war, all the supply chain problems, these are just sparks, or they're little flakes that are causing the avalanche to take place. The avalanche, in my opinion, has been brewing since 07, 08. And now to the news that we had yesterday, because up until a couple of days ago, it looked like the Russians were going to normalize Nord Stream 1, but it came out yesterday, early evening here in Europe. It says, this is from skynews.com, Europe's natural gas flow hit as Gazprom to cut Nord Stream 1 capacity again. Russia says the issue is maintenance, but Europe says the Kremlin is using its energy supply as blackmail tool. So I'm not going to go through the article, through the whole thing, but suffice it to say it's very serious for the coming winter. It's very serious for the German economy. Of course, Germany is the economic powerhouse of Europe, not just the EU. And I say Europe because the UK is part of the European geographical area, and there are other countries that are not in the EU either. And yesterday, of course, we saw the Dutch TTF gas futures go up to an almost all-time high. I think it could break 200 very soon. And just compare it to 2020, only a couple of years ago, it was trading below 15, and now we're at 100. Where are we? 180, so 10 times more expensive. And what does this have to do with a spark for hyperinflation? Well, reading this book, it talks about not just the borrowing that the German government did, but also in the aftermath of World War I, when Germany lost. They lost a lot of territory. They lost Alsace-Lorraine to France. They also lost the Saar land, and that had a lot of the coal and the natural resources that the German economy needed. And it also talks about how in 1923, the French, beginning of 23, the French occupied the Ruhr Basin. And that was another spark, I think, for the hyperinflation, because it was just as the hyperinflation was kicking off, the inflation was getting worse. So this is what it says here on page 128. The Ruhr Basin in 1923 provided nearly 85% of Germany's remaining coal resources and 80% of her steel and pig iron production, accounted for 70% of her traffic in goods and minerals, and contained 10% of her population. The loss of the Ruhr's production and all it implied was therefore a bale of last straws. At 35 to the pound, and this is the mark, Reichsmark, to the pound, at Christmas 1922, the mark fell to 48,000, and the day after the invasion of the Ruhr, and at the end of January 23, touched 227,000, well over 50,000 to the dollar. That was the moment when the Reichsbank circulated its first 100,000 mark note. And its purchasing power equaled a little more than $2 or 10 shillings sterling, perhaps a tenth or 15th of what its face value must have been when it was on the drawing board. It did not matter. A 1,000,000 mark note was on the stocks and would be issued within another 3 weeks. So, of course, we're not having these big denomination notes issued, but I think what this Nord Stream situation does, it accelerates the problems with energy. It will affect the whole economy, the prices of everything in Europe and around the world. And it's ironic because back then, the sanctions against Germany after World War I hurt Germany and led to, it was one of the ingredients for the hyperinflation. But now, I say it's ironic because the West is actually doing this to itself. It's putting sanctions on Russia and all the other things they've done that have backfired and acted as sanctions on them. So it's really crazy the way the world is. And of course, I don't have to talk about all the political and social mayhem that's going around in the world. That's not just in Sri Lanka and Panama, but it's also starting here in Europe, the Dutch farmers, and it's going to get worse. And that happens in currency collapse. And I think people are losing complete faith and confidence, not just in the currency, but more importantly in their leaders. People, not everyone for sure, but there's a minority out there that's growing, that is realizing what's going on, and they're losing faith and confidence, and they don't believe anything their leaders or any of their institutions say. So are we going to end up carrying around or pushing wheelbarrows with banknotes? No, I don't think we are. History repeats itself, but it doesn't repeat itself exactly. It rhymes. So, and nowadays I would say the establishment, the powers that be, have a lot more control over us. And I think the situation in Taiwan, also with the Pelosi situation in China, it could get even worse because, yes, it would be another, how can I say, nail, hammering another nail in the on the coffin here of this hyperinflation situation, because we've cut ourselves off from food, energy already through the Russian sanctions. Can you imagine what would happen if China got on the same boat, so to speak, vis-a-vis the West as Russia? We would be cutting off the supply of, almost everything that we buy. I know a lot of it is junk, but be as it may, it's not just finished products that China makes. They make intermediate goods as well. And Germany, for example, Germany is the world's powerhouse in terms of manufacturing machines that help other countries manufacture things. So we're destroying like the world's tool maker. We're destroying the world's breadbasket in Russia, and we could destroy the world's shop, so to speak, with China. Those are the three. I would say that would be really catastrophic, and I could see that happen. How do you prepare for that? I mean, that's up to each individual. I'm not a prepper channel. I recommend you go to Alaska Prepper and many others. But I'm more here to try to help you understand what's going on. Maybe also protect yourself a little bit outside the system with gold and silver. And so interesting times we live in, and that's not necessarily a good thing, of course. So with that, let's quickly look at where the markets are this morning. Yeah, the light is really strange today. It's outside. It's the kind of light that it is today out there, and it looks a bit foggy. It happens once in a while. Some of you have noticed it. So right now we got spot gold at $17.25. It's up $5. High's been $17.28. The low $17.17. Silver is up 20 cents, $18.62. High is $18.70. Low has been $18.37. To the stock market, the Dow futures down 100, a third of a percent, 31,880. The Nasdaq is down 35. S&P 500 is down 10 or a quarter of a percent. I saw Walmart had really bad results. It came out after the market closed. It said that higher costs, high prices are making people buy less, which is normal. Is that going to create disinflation? No, I think it's going to get worse. All the things we need, all the basic necessities of life are going to get more and more dear in terms of our currencies. So we continue here. The FTSE is up 36 points, 0.5%, 73.40. Eurostoxx 50 is down 5. To the currencies, sterling is unchanged, 120.50. The euro as well, 102.20. The dollar is unchanged versus the yen, 136.66. Dollar's up slightly versus the Swissy, 96.50. And the dollar is up slightly as well versus the yuan, 6.75. So fairly quiet, the Forex markets. Just a quick look at the dollar versus the ruble. Yeah, dollar has been picking up a little bit versus the ruble. We're at 58.50, up 1.3%. To the rest of the currencies here, we've got the Aussie dollar up 0.2 at 69.70. The dollar is down 0.2 versus the Canadian, 128.23. And the Kiwi dollar is unchanged at 62.60. To the general commodities, well, we've got WTI crude up 1.7% at 97.90, and Brent is back above 100 at 102.30. High-grade copper is up 2% at 343, and U.S. nat gas is up 1.4% at 870. So I expect U.S. nat gas to continue higher because Europe might have to buy some of the LNG, liquefied natural gas from the U.S., which is really more costly than getting the gas straight through the pipeline. So let's look at the U.S. Treasury yield curve, the bond market. And yes, we got GDP on Thursday. I know that the politicians, the administration, even the mainstream media are trying to change the definition of a recession. It might be verboten now to talk about a recession. Who knows? Maybe YouTube is going to censor us. But the yield curve is not lying. The 2-year yield is at 302. The 10-year is at 278. So 24 basis points inverted now. It's getting worse and worse. And whatever Brandon says, don't believe it. We are basically in a recession already. And if you look at the definition or the equation for GDP, it adds government spending, and the government in the US and all around the West are still doing heavy hitting deficit spending. So without the deficit spending, we'd already be in a recession, because without the government, things would be a lot worse. And the government's actually a lot worse in terms of the data. All the government is doing is making it worse, of course, by borrowing from future production and also taxing you to waste your efforts and putting it where it shouldn't in the economy. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And yes, I wish you all a great rest of the day. Take care. Bye.